Well, welcome everybody to this Help to Grow webinar focused on late payments and what to do about late payments. This is for the Help to Grow Management Alumni Network. And so welcome to everybody that's going to be watching today. And also, of course, to the many people I know that will watch the recording as well. We've got an interesting discussion with some interesting speakers. There are going to be some resources available, and those resources will be available to you and to everyone else on the page that you use to register for the event, and they'll be there by the end of play today. There are two chats just in terms of housekeeping for you to access today. One chat is the classic chat, and please use that for comments and networking or any other comments you might have. And the other one is for the Q&A. So if you have any questions, and I hope you'll have questions, I think we'll have good discussion, put them into the Q&A chat, and we'll try and bring them up in the discussion. So in terms of our guest today, we have an interesting guest. I'm Terry Corby. I lead Good Business Pays, which is the main campaigning organization trying to bring an end to slow and late payments for small businesses. We have Liz Barclay. Liz is the Small Business Commissioner for the UK. Liz is waving and responsible for payment practices and payment reporting and the payment codes for the 6.5 million small businesses in the UK. Liz will tell you more about that. And we have Steph Scholes, who's a small business owner who runs a corporate gifting company called Needi. We'll hear about that. And we have Joe Selwood, who comes from Amy, the very big construction company. So we've got the voice of large enterprise, small business. We've got the small business commissioner and the campaigner here. So we should be able to bring you a fully rounded set of experiences and views, and then we want yours. Okay, so we're going to get into it. I'm going to start with Liz, really to sort of paint a picture for us of the late and slow payment landscape and tell us about the role of the Small Business Commissioner. Many people will not know about that. Give us a flavour of what we're talking about here, Liz. Thanks.
Thank you, Terry, very much indeed. You have already mentioned late and slow payments. And as you and I talk about very often, we have late payments, as in overdue invoices and payments that are paid after the date that they were due. But we've also got slow payments to deal with. And that's where somebody contracts to pay their suppliers slowly. By that, I mean possibly 60 days, 90 days, 120 days. I have seen even up to 360 days in a contract, which really took my breath away. So we are trying to combat both of those scenarios. The Small Business Commissioner was set up in order to deal with those late payments. Everything's been lumped together as late payments. But the Small Business Commissioner will help resolve disputes if you are in dispute with your bigger customer over non-payment or late payment of an invoice that you have submitted for work that you have done. We can help you to deal with that dispute. On the contractual side, we're there to try to change the culture that says it's okay to pay somebody in 120 days, when actually they're a small business that really does need to be paid within 30 days, but hopefully even quicker than that. So we're there to try to help resolve that situation, get people paid quicker. And in my view, if you're a big business and you've got suppliers in your supply chain who are small businesses, then you need to understand their needs and really think about why they need to be paid quicker and within that 30 days, possibly even 7 days, because those small suppliers are serving you. They're giving you products, they're giving you services, they're allowing you to sell on really good products and services to your customers. So they're the talent that you're depending on, and you really need to pay them so that they don't go out of business and you're left looking for another supplier. So everybody benefits. Everyone benefits if everybody in that supply chain is paid quickly, is resilient and sustainable, and the supply chain doesn't fracture because somebody's not been paid in time and has gone out of business. That's what we're there to try to solve. And you can come along and talk to us about your payment issues, and we will do our best to help.
And just a quick question to round that out, Liz, from me, which is, how did we get here? Why does it happen? Why does late payment happen?
How did we get here? Well, Terry, you know that I've been a broadcaster for many, many years. And then the first Wake Up to Money program on 5 Live, which was about 35, 36 years ago, we dealt with late payments. That was the first issue that we tackled on that program. So late payments, as in overdue invoices, have been here for a really, really long time. Sometimes it's simply that bigger businesses have very convoluted and complex processes. Things have improved hugely over the last 12 to 15 years in particular, because of digital adoption and better technology and cloud accounting software and so on. And so 15 years ago, on average, you might have expected that payments would come in around 82 days. Now it's around about 32 days. But sometimes you see when an economic climate is, is reducing, is decreasing, is getting worse, is worsening, that some big businesses will want to hang on to cash in order to keep their own businesses afloat and working effectively and efficiently. And as part of that, they'll start pulling out their payment terms in their contracts. They'll start paying people later. And that's when we can tell that the economy isn't in a great shape, or that that business itself that is making longer payments or slower payments, or not paying when it used to pay on time, we can then see that they themselves might be in a bit of financial difficulty. So things have improved over the years with technology. However, we're beginning to see that little bit of lengthening of contracts now, because firms are a bit more worried about what money they've got in the bank. We need to get firms to understand each other better, because big businesses don't necessarily understand how small businesses operate. And small businesses are not just a smaller version of a big company. They don't have the same capacities, the same resources in order to chase up invoices, to charge interest and compensation. They don't have all of those resources at their fingertips. And so sometimes we see those small businesses really needing help, or the threat to them is existential. So we've got to get this right. And we've got here over years and years and years of convoluted practices, and some companies actually feeling it's okay to use their small business as a bank. And my message is it's not.
Mm. That's right. And first question's coming from Laura, which is brilliant. So I'm not going to ask it now, but Laura, I will get to your question as you hear a couple of the other panelists. But at least I know there are other people on the other end. I can see actually there are nearly 90 people here. So do let us know if you've got any questions or disagreements or whatever it happens to be. So you've talked, Liz, a little bit about what small businesses feel and how it affects them. Now let's hear from Steph Scholes. Steph, tell us about your business, first of all, which is an interesting business model, and your experience with late payment, as Liz set out.
Thanks, Terry, and hi everyone listening today. I'm Steph. I'm co-founder of Needi. We're a corporate concierge gift matching service. We basically use psychology and AI to find the most thoughtful gifts from the best local independent businesses for all of our corporate clients. So we're the preferred gifting partner of huge businesses like Virgin, Meta, Microsoft, which is very interesting. From the other side, we've got all of our local independent merchants, which I'd say 70% of are, a team size under 10 people. So we really are kind of the connector between them both. And it can be anything from Christmas gifts, special occasions, branded merchandise. But what we're there to do is, we know that a lot of our clients, especially in larger organizations, they see the value of how gifting can motivate and retain team members and clients, but they don't have the time to do it. So we're here to make their lives a lot easier, but also juggling the balance of working with these massive companies as our clients, but also making sure we're really supporting those local businesses that are on our marketplace too. So it's we've learned a lot over the last 3 years since we launched. And one of the things is definitely getting that flexibility from the larger businesses, because it's huge the impact that it does have on our merchants, where when they need to do a pre-order for a large order, they have to take that out of their own pockets if the client can't pay that immediately, or at least some kind of a deposit. So when you are working with companies who have a 90-day payment term, that is making the livelihood of some businesses and Needi at the start, you know, when we didn't have our investment, where you are really panicking about how you're going to pay staff salaries because you need to front up, you know, £50,000 before that client pays in 90 days time. Want to make sure our local merchants are fine, but also that they can deliver on the gift, because quite often with our smaller businesses in the past, when they weren't on Needi, they've not been able to accept orders because the larger businesses, there's no way of them paying early, they won't do that. So, and they don't have the cash to upfront for that kind of order size. So it's a tricky balance to manage the two.
So you're stuck in between the very large clients that have long payment terms and smaller independent providers of stuff that you have to pay or want to pay pretty much immediately.
Exactly that. And, you know, we know when we get these large orders in for our independent merchants, we do our best to try and get at least 50% in advance from our corporate clients, which they do. The majority of them, when you talk to them and you get through to the right people, they can be flexible. But it does make a huge impact on cash flow for Needi, but also for our independent merchants as well.
Now, I know that you're a small but growing business, but you have very big clients. So I'm going to ask you, and I'm going to ask Joe in a second as well, this question that Laura asked, which is a very good one. Laura Holman asked, which is, you know, if you've got a client that where you've got terms, they say a 30-day term, but they're always paying late, you want to challenge them, but we constantly hear, how do you do it in a way that doesn't ruin the relationship? What do you have to say to that?
I mean, we've been in that position many times. First of all, just from a logistics perspective, it's removing the person that's kind of the main account manager and kind of putting it more towards the finance team to do the chasing. We've definitely found that keeps the relationships alive with the people who are building them with corporate clients, to separate the two. But I would also say it's just having a really simple implementation of something like QuickBooks, which will help you do all those automatic chases. It's a really simple tool. And it's fantastic because once you've got that data in, that will send all those automated responses through. Another one that we found works really well is getting in with the procurement team, so you're on the main suppliers list. But also by having that, you've kind of got access to have those conversations when things are late.
Right. Good. We'll come back to this. Now I want to switch to the other side of the table and hear from Joe, because as small businesses, we're a small business. We're lots of small businesses here, but a lot of us won't understand what it's like working in a very large business, dealing with thousands of suppliers. So, Joe, tell us about obviously your company, your role, what a day is like for you, and then also, if at the end of that you can maybe give your perspective for Laura's question, which is, you know, if there was a late situation, how does a small supplier approach someone like you and your team without upsetting you and making sure that you pay quickly?
Yeah, no worries, Terry. So, afternoon all. Joe Selwood, work at Amy. We've got just over 5,000 suppliers, looking at just after £1.2 billion worth of payments on a yearly basis, which relates to around 200,000 transactional entries into the creditors ledger. So, you know, what we talk about, or what I talk about, is large. You know, is a large scale organisation, which can really vary in regards to, you know, work delivered, whether that's on the, you know, the railway, highways, you know, prisons, etc. There's a few points just to pick up. You know, one of the key words that I picked up from Liz just to start with was culture, and I think that's really, really important. Culture around payments, but also culture within business. Amy, sort of 11 years I've been with the business. We've gone on a journey where our culture has certainly changed, and what that looks like in regards to, you know, the value of making sure that we pay to terms, and what that looks like, and making sure that, you know, we are fair payers as well. But the culture is really driven within, because that comes from the top, you know, downwards, basically, is how I see it. And that then links into, I think, one of, you know, Steph's, you know, keywords that I picked up around communication. That's really important. You know, the communication within a business, making sure that people understand the importance of what it is. You know, in a large organisation, the same as a small organisation, everyone's busy. You know, there's a lot of work to be doing. But communication is really key to make sure that, you know, everyone understands the importance of, you know, legislation, the importance of, you know, what it means to pay on time, and what that looks like. So, you know, the culture, I think, is really important. linking into then that communication piece, and then process and procedure. Again, linking back into to Liz, at Amy, we have the opportunities to incorporate, large ERP systems, AI, technology. We're continuously on like the cuff of, changing. Potentially not all SME providers or smaller businesses, don't have that opportunity, which we understand. But I think what's really important then is that communication is when you onboard a smaller supplier, they are fully aware of the processes and procedures. Let's not onboard somebody to fail. Let's onboard somebody to succeed from that point. So, that communication is really important. This is how, this is how we accept an invoice to come in. It has to be billed against the purchase order, all of that good stuff. Make that really clear at the start, so the expectations are there and they can be delivered against. So, for me, Terry, that is really important, that you bring in the supply chain on your journey. You're not working against them. And that hasn't always been like that. Like I say, 11 years ago, I didn't see that journey together, but certainly now I see that you need to bring people on board and you need to bring them on that journey for success. We pay well, we receive cash, we pay our supply chain well, they keep operating, they keep delivering our services, as Liz said, that's really, really important. And I think probably then that comes to a good point in regards to the question that you asked from my perspective. I think the supply chain should feel empowered in regards to being able to tackle these sort of challenges. And I would expect, like Amy, like other large organizations, we have a huge amount of data that we're reviewing monthly, weekly. We probably understand where that is before the supply chain is necessarily even speaking to us. I don't think there should be a nervousness, or if you challenge a large corporate company, you're not going to win any more work. I don't see it like that personally from my perspective. I think these should be discussions that should be welcomed, and pick up the phone. Steph, great example about AI and quick note, sending out information. Let's also supplier calls. I try and install with my team to speak to the supply chain, pick the phone up, understand their issues and work with them. Again, it's that journey, right? How can we get, 45 days, right? That's not good enough for us. We need to get to 30. Well, how are we going to get to 30? What are you going to do? And what are we going to do? Because to me, it meets in the middle, or somewhere in the middle, that you need support from both sides to get this to work. So I think for me, really important that our supply chain feels there's the opportunity to speak to us and say, this isn't working. What can we do to change that? And then you support that and you work through that. It's great for me to sit here and talk about that, but that's been an 11-year journey, with me at Amy, and I've seen what bad looks like as well, and what good looks like, or what better looks like maybe is the position we're in at the moment. But that really is, the culture, communication, and process and procedure. And sometimes also as well lacks in that the process is important to try and make sure that it works both sides, but then, keep your compliance and your governance up. So again, it's all about that talking to the supply chain, understanding what the impact is, understanding what poor paying is doing to them, and then see how you can drive through efficiencies and savings.
So, Joe, I'm going to come back to this word culture. And Liz, I know you've got your hand up. I'll come back to you in a minute. But culture, very important. Your company, Amy, and the work that you've done over quite a long time is about leading a better payment culture. So in that sense, suppliers, smaller companies coming to work with Amy, you can check the box. In fact, just a flag wave for Good Business Pays at the moment. If you go to the Good Business Pays website, you will see yesterday we just awarded our Fast Payer Awards to 275 companies. These are the companies that have a fast paying culture. Amy, in fact, is one of them. Excellent. But there are also ones that are bad payers there, right? And you've seen bad and good, you mentioned, Joe. And what do you think is behind bad payment culture? Is it just attitude, or is it something else?
I think attitude is part of it, Terry. I think it's the understanding, and that's where that communication comes from. As I said, we don't want to set somebody up to fail. So historically, it's always you and I rather than we, which is really important. Bring everyone I talk to about on that journey. As well as the bad culture can sometimes be linked into actually not understanding and maybe abusing the supply chain a little bit, as understanding what that looks like. And I say, 11 years ago, maybe we didn't understand that. But I certainly think now within the construction sector, with the demise of some really big players in that, we understand that, because we feel it if another company goes under. The supply isn't there. The demand. We've got to make sure that we have an operating supply chain to deliver what we need for our key clients. So yeah, I think it's the attitude, but maybe certain to a degree over the last 11 years is maybe appreciate more around what we're trying to do, and the value of what we're trying to deliver. We work with somebody rather than it's us and them, and then you get into that really sort of middle ground, which can be really difficult to start to work through. So I think that's the biggest change, is the appreciation and understanding that we're only going to achieve something if we work together.
Yeah, and we'll get into a little bit of conversation about contracting and relationships between suppliers, big and small. But as I say, if you go to goodbusinesspays.com, which they've just put in the webinar chat, huge amount of resources, all for free. You don't have to register to check anything, but you can check who you want as your customers of choice and who you don't want as your customers of choice. So this is an interesting question. How do you maintain those relationships with suppliers by challenging them, Liz? Have you got a point on that, or do you want to pick another point?
One small business said to me not so long ago, put the work in at the beginning. And the small businesses, to a certain extent, have to do their share of that work as well. I take on board everything that Joe said, but Joe, you are proving yourself to be a good leader in this field. There are a lot of big businesses that haven't quite taken the same tack over the last 11 years and haven't quite got there yet. And their procurement department doesn't know what the payment department knows, and the payment department doesn't know what the procurement department knows. So if you're a small business and the procurement department tells you you'll get paid in 30 days, you need to really understand what that means. You need to know what the date is that you are going to be paid. And I have an example where a small business was told by procurement, you'll be paid in 30 days. When he eventually got paid, he had waited 210 days, because what procurement didn't know was there was an 180-day approval process in the middle before that invoice ever reached the payment department. And then payment did pay in 30 days. So internally, companies need to know, but they need to do the onboarding bit, as you talked about, and make sure that the small businesses know exactly what's needed in advance. But the small businesses equally need to keep coming back and ask the questions at the beginning. And they need to ask for written contracts. They need to ask, what do you mean by standard terms? Because otherwise, everything will take you by surprise. It will take you by surprise that you have to wait that extra 180 days, God forbid, that somebody told me they had to wait for. Now, on the other side of it, though, small businesses need to be clear that they are small businesses, that they need to be paid and why they need to be paid quickly. A woman came to us on a Friday afternoon and said, I have nothing with which to feed the children over the weekend. She said, I have been trying really hard to get paid. They keep saying yes, 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 yes. We phoned the CFO of that bigger company, and he said, oh, I never thought about it like that. He said, I didn't realize that £300 would be so important to that business, because he hadn't realized that it was such a small business that £300 would make that difference. And he had been signing off big payments and approving big payments all afternoon for 30,000 and more. He said, I will now pay that money out of my own personal bank account and sort it out on Monday morning. And we know that he went on from there to overhaul the entire payment process within that company, much in the way that you did, Joseph. But big firms don't always really understand their own processes. They're not embedded within the company, and they're not onboarded, and the information isn't given to the small business. But the small business equally has to make sure it is absolutely clear right from the beginning. Do I need a payment, a PO? A payment, or what do we call it, Terry? What's a PO number?
A purchase order.
Purchase order number. That's the one. It completely escaped me for a minute. Can you ask for upfront payments if you're having to buy in services or materials? Can you get paid in stages? can you get that contract? You must get that contract in writing. But there is another issue on the questions, Terry, where somebody has said, we end up having to chase and chase. There should be extra payments for having to chase. There are. You can charge interest on the late payment, depending on the number of days that it's late, overdue the agreed date. And you can charge compensation if your invoice is late. So come along and talk to us at the Small Business Commissioner, and we will help you to go through all of those processes. A lot of firms say it wouldn't damage the relationship. We'd rather know if you came to us and talked to us about how you need to be paid, why you need to be paid, and if you're chasing up an invoice, we'd rather know, but nobody has actually ever challenged us on that. So we really do need to be sometimes brave and say, yes. And the other question for me is, if you're not getting paid on time, does the relationship actually work for you in the first place? And sometimes small businesses will say to me, we decided to walk away and look for better customers.
Steph, I'm going to ask you a question. So this idea of, as Matt Oliver's asking the question about, 30, 60, 90-day terms, who has the right, the seller or the buyer? I mean, how do you negotiate terms with these big companies, or do you take what they give you, or how do you approach that discussion of 30, 60, 90 or whatever?
We've definitely learned a lot, I'd say, right at the start, where you're bordering on desperation of bringing on board new clients, and you're wowed by a huge corporate name that, oh my gosh, they're going to work with us. And we absolutely went with whatever they wanted, and that was a huge mistake, because now we are locked in 90-day payment terms with some of those businesses because that's their standard practice. And just like Liz said, we didn't communicate it because we were naive and assumed it was standard and that was all good, and didn't really overthink our cash flow. And now when we are going into any new client contracts, it is very much, we take payment within 30 days. It has to be 30 days from order. We also say if it's for branded goods, for example, because they are things that can't be refunded, we take 50% payment upfront. Sometimes we do take full payment upfront. And when we started to do that, we were petrified. We thought, we're going to push people away. No one wants to do this. It was absolutely fine. As long as you have that really high communication and you set the terms at the start, that we have, touch wood, we've had no issues with that. And it's very rare. Of course, we do get some late payments, but none that I would say have gone over 30 days overdue. And that is purely just using the QuickBooks reminders. And I would still say, separating your relationships, we are very much, even at the start when we didn't have an accounts team, having that accounts email address that can hammer the client without any relationship issues with you as the main person that's trying to kind of build and grow that relationship. But there are businesses out there. I mean, Unilever, one of our clients, when we first met with them, they were on a 90-day payment term. And then when we were talking more, we said, we are 30 days. And when we explained we're a small business, they said that's absolutely fine. We support small businesses on a 30-day payment term, and we will change that because that's the business you are. So lots of companies will be flexible. And I think, like Joe and Liz said, you just have to have that open communication and set the expectations from the get-go. Otherwise, it will trip you up as a small business down the line.
And Joe, I mean, I know you've worked in a range of big businesses, not just in Amy. How much flexibility do you think there is when you're sitting in the big business for a small business to have that kind of conversation that Steph mentioned with you? I mean, people will be afraid to ask for, a different payment terms, perhaps, or not broach it. Is there flexibility, do you think, in that negotiation?
I think there is flexibility, but we're actually now governed and driven by legislation, which actually underpins and supports that, which I think is really important, Terry. So, back to provider, right? Okay, 30 days. That's where the angle comes from. Is large corporations should understand around the legislations that's out there, and that's really important. And then the flexibility within that. Okay, 30 days. Can we go on 15 days terms, for example? I think again it's a moving environment of where we were and where we are now. So I think there is the flexibility, but I think as a minimum, the underpinning of the legislation really does support that. I'm somebody that has to work with the data and provide an update back to the C-suite in regards to our prompt payment and our SME payment. And then that really does underpin exactly where we are. That then drives the culture. I talked about culture earlier, but they're the legislations which we're working against. So I think that has helped. Yeah, they might be, a large company might say 60 days. Well, actually now Steph's been empowered and said, no, there's 30 days because we're an SME, and that's what you have to adhere to. So I think there is more flexibility, but then the legislation underneath that underpins and supports the right behaviours, because it's a behaviour thing, I think, more than anything.
Yeah, and it's probably also worth explaining to your big customer what type of business you're in and why fast payment, because in some industries it will be different than others, of course. Some places that fast payment is very, very important if you've got to shell out on costs and what have you straight away and then provide the service later on and get paid later on. It's worth having the discussion about why, not just what. I think one of the questions that came up, or it's in the webinar chat, but I think it's relevant, Liz, and maybe it's one for you, is there's so many different terms around, and we've talked about it before, say 30 days. You get paid in 30 days, or is it 30 days at the end of the month, the 30 days net, 30 days this, that, and the other? What do all these things actually mean? People might not actually know what it means when they see these terms in terms of actually when you get paid.
But Terry, this is why I say you really need to ask, what's the date? What does that mean in terms of the date that I'm going to get paid? Somebody else also said, look, we say on our terms, our payment terms, we need to be paid in 30 days, within 30 days. And who's got the right to say what 30 days is? Well, actually, it's a negotiation. Everybody's got to agree. So you can't agree if you don't actually know what it means. So if you're told you're being paid in 30 days, the question is that 30 days from the date that you receive my invoice? Because that's what the legislation says, that you should be paid within 30 days of receipt by that bigger company of your invoice through whatever channel it arrives in that organization. So there's no point in putting it in a drawer and pretending you haven't seen it for 30 days and then passing it through an approvals process that takes another 30 days, because then you're already late. So you need to be very, very clear. What do they mean by 30 days? 30 days end of month means that if you send in your invoice a day after the end of month, now, of course, you don't know when they're ending their month. You don't know when their payment runs are set up to run. So, you could then have to wait another 30 days beyond your 30. So you really need to know, what is the date that I can expect to be paid? And small businesses need that certainty, because if you don't know when the money's going to hit your bank account, you don't know if you can pay your own bills, pay your own staff, pay your own suppliers, etc. And of course, you don't have the certainty to invest in anything. So you can't improve your skills or buy better equipment or take on more staff or be more innovative. And of course, if you can invest and you can actually improve your own business as a supplier, then you're going to be selling a better product back up the supply chain. So it's to everybody's benefit if everybody knows exactly when they're going to be paid. But the legislation says 30 days from receipt of the invoice, and you can extend that to a maximum of 60 days. That's fair enough, but that's got to be by agreement. And if you extend your payment terms beyond the 60, it's got to be by agreement and not grossly unfair to either of the parties. So the question is, are you agreeing to something that's grossly unfair to you? The legislation is on your side as the small business too. The problem keeps coming back to people being fearful of losing future business if they push back.
So Liz, just to be clear, so you're saying there's legislation that says, as a small business, if you are offered, let's put it that way, payment terms of more than 60 days, that's something you can push back on.
Yes, it is something you can push back on. The problem is, and Steph will know this, it's very hard to have the courage to push back and say, and lots of people don't know what the legislation does say. And lots of people are very worried to push back. Somebody offered me payment in our standard terms. Now, I didn't ask what their standard terms were. And as a result, it took me by surprise that I wasn't going to get paid until 3 months after I had delivered the piece of work. Now, I can't manage my cash flow if if I have to wait 3 months. And the other point is that if you were telling your employees that they were going to have to wait for 3 months to get paid, that certainly wouldn't be fair. So think about what is fair to that small business, what is fair to any business, anyone who's supplying you. But what is fair, and why would a small business need to be paid faster? And then follow Joseph's lead. But there are a lot of businesses that haven't got there yet, and their processes are very, very complex. Now, Joseph, you talked about the thousands of invoices you've got, but I know big companies that are spending millions of pounds, literally, improving their payment practices because they have, 250,000, 500,000 invoices in a year. So they've got a huge, complex system in order to, spend money on to improve. And lots of boards haven't realized the significance yet. Lots of chairs and, CFOs and non-exec directors haven't taken on board yet how important this is. And that's where we need to get big businesses to come to the table.
Joe, a couple of questions that have come in about purchase order numbers, because that's always a very important thing to get right. Is, if you're chasing up getting paid and you've got all those thousands of suppliers, the best way for you to locate an order is with a purchase order number, right? You can map. If somebody's having trouble with a buyer and they can't get a purchase order number, struggling to, what do you have any recommendations or tips for them in that situation?
Yes, Terry, I was reading the comments as well, and I see PO as a common theme. Like a lot of larger organisations, Amy operate no PO, no pay. Go back to my original comment, apply to a company. The expectations should be set out, and and if they're not set out, ask, do we need to be paid via, purchase order? Are we being paid via P card? I think Liz was, saying, the expectation of when you're going to get paid, also the expectation of how to get paid is really important there. So the PO and Terry, we've been through cycles at Amy. 11,000 people, and probably 8,000 of those people have an opportunity to go out and buy something or procure something. Again, it links back to the culture and setting in, good examples of what good looks like. But for POs, and it's really making sure that the supply chain understand what's expected of them. I see one of the comments, and I totally understand it, around good faith. Well, good faith is great, but you're actually putting yourself at risk around not getting paid. So ask the question, right? I'm going to deliver these goods, or I'm going to deliver the service, but I need a PO. Asking for a PO shouldn't be a big ask. And actually, that's your contractual agreement where your T's and C's are set in, from my perspective, around payment and assurances there. So I think you've got to equip yourself with what you're going into. So this is how we're going to get paid. Do I need a PO? No. And then, tips from that is, as from a large organization, I've spent a lot of time, go back to that culture perspective, going to our commercial team, procurement team, finance team. Do you actually understand what you're doing here? You're actually putting Amy at risk. That's what, how I look at it. You're putting us at risk because you're not following a process, which means our supply chain can't process or send us invoices, which means we can't pay. And fundamentally, just to give something back on that as well, actually costs large organizations a huge amount of money when processes and procedures aren't followed correctly, the same as a small or medium. So it's in our best interest, so to follow a process, and processes should be to support that. So for me is never deliver anything in good faith. I understand the reason for it, but that PO really does underpin everything, if that's the way that you're going to procure and bill against. So ask the question, really understand before you start to deliver something for a company or provide a service, right? How are we getting paid? So Liz's point is really true in my ears. Understand how the document is going to go from your system to their system, and the money is going to go into your bank account.
But Joseph, if a small business asked you those questions, what would your reaction be? You would probably think they're a very professional outfit.
Correct.
and I want to work with them in future.
Yeah, it'd be more nervous when they're not, they're the sort of questions we want to be asking when you're onboarding them, because you understand that they want to follow a process and procedure to get paid.
Yes.
And professional, they're asking the right questions rather than, oh yeah, I'll just do the work, don't worry, pay me, and pay me when you want to, sort of thing. That's when things become quite challenging, and things cannot be understood. So yeah, they are, Liz, correct, that the right questions to be asking large organisations to make sure that they also understand, the process that you need them to follow.
But sometimes it's hard for the small business to know what the right questions are to ask. And so everybody has to work together. You have to come back and give them as much information as you possibly can. If there's something that you've missed and they asked it, then that's great. But it can be extremely hard for a small supplier, especially startups, especially somebody new to a particular game. It's very hard to know what are those questions. And so I think the big businesses have to do much more nurturing and supporting of the supply chain, because if the supply chain fractures from the bottom up, it leaves you with a big hole.
And I agree, Liz, and I think we see that, alluded to earlier, the legislation changing things. So rather than, us being asked all the question, when we onboard a supplier now, they get an induction pack, which is sent out from our accounts payable function, which says, this is how you invoice and this is how, as I say, set them up to succeed is so, so important. Don't set them up to fail. And the legislation then supports that, because it keeps both paths on the right track, as I say, because if they're going to fail, you're going to fail as well, because you're not going to pay them within 30 or 60 days. That's the really important thing. So we've had to learn and develop in regards to, right, when we onboard people, are we onboarding them correctly? And do they fully understand what we need? And then, what they need as well. And then you meet in the middle. So yeah, I agree. Large corporate companies have an opportunity there for education and follow best practices.
I hope what people are picking up here actually is a lot of this is about human relationships. Yes, there's technology and what have you that does a lot of the backroom work. But if you look at where Joe's role sits, sort of paying companies in the accounts department and the procurement department, have relationships and make friends with people there and understand what the process is, as well as the person who's buying your service. And there's nothing wrong with saying to the person who's buying your service, can you just ping me over the purchase order number so that we know we've got that, locked and loaded at the beginning. And if you are doing all of those things and being a professional company, then in terms of being on the supplier list for the procurement department, for the accounts payable department, you're more likely to stay there as well. I think, Steph, have you gently managed to persuade clients who haven't given you a purchase order number to get one? Any tips from your perspective?
Yeah, again, it goes back to relationships. Everything that this conversation is about, really, is making sure you have that relationship with the person that's buying from you from the get-go, and the quicker you can get into that procurement suppliers chain, the better for your relationship as well. But also, we've had a lot of success where sometimes in the larger companies where they're struggling to get the PO, what are the other options? Because we find, our main contacts are kind of marketing directors, EAs, office managers. And quite often people in companies do have credit cards that they use for company purposes. So we've often found in those scenarios where a PO is not possible, they can pay it on the company card instead, and they can make that instant payment as well. So there are always options for what you can do. I would say that just it's kind of having that open mind and find a solution together with the large company.
Steph, have you ever charged a late payment fee on an invoice?
We've not, no. We've had a lot of companies over the past. There's one company especially, which is a huge organization, and even to this day, it's a 90-day payment term, and they're always late. And I will be completely honest, they give us so much business, we almost take it with it is what it is. However, we are in the process. I've actually just this week had a meeting set up with someone in the procurement team to kind of get the wheels in motion. Our contacts are fantastic and they're doing everything they can to really speed up the process. But then it's obviously going into a huge, wider, churn of people. And we just can't seem to get to that decision maker to try and bring that forward. But yeah, unfortunately, we're still in that position. But what we're doing to try and combat that is get to the person who's responsible and really try and get that communication going. And hopefully we can bridge that gap.
Liz?
Yeah, can I just add a warning here? If you are a late payer, your company that you're paying late, so let's say you're paying Steph late consistently like that, and Steph decides to wind up her company in 6 years' time, she can come after you for all of those late payment fees, for the interest that would have been paid on those invoices, for the compensation that would have been paid on those invoices. And last Friday afternoon, we had a call from a small company that said, we've always paid maybe 1 or 2 or 3 days late. However, we've now been handed a bill for £10,000, and this is going to make us bust. But that £10,000 was made up of interest payments that would have been due because they paid 2 or 3 days late each time on an invoice, and the amounts of compensation that were due on each of those invoices. And they'd added up over 6 years to £10,000. So if you are in the process of paying late, maybe because the way your payment runs are set up, and you have agreed that you're going to pay somebody in 7 days and you're paying in 10, you really need to think about what could come down the line later on if you're consistently late.
Right. I'm going to, we've got quite a few questions that are coming in now. So I want to do a sort of an quiz show style, a quick fire set of questions. Edward asks, he's got a client that has said that they want them to sign a contract where they won't accept late payment charges. Is that legal? That'll be a Liz one.
You are in law allowed to charge your interest on your late overdue invoices, and you are allowed to charge compensation. Now, therefore, if they simply put that in a contract without your agreement to that contract, yes, it wouldn't stand up. But if you've agreed to do that and to waive any of those charges, then it's a much, much more difficult situation. So my advice would be to simply not agree to waive your legal rights, because you have those legal rights.
And perhaps we can post that little bit of legislation afterwards on the resources page so that people can see where that law is.
All on our website, Terry. If you
all
just
on your
simply come
website?
to the Small Business Commissioner, you'll find us.
Okay, perhaps we'll put that on there for people. Also, Liz, what do you mean by compensation? Somebody's asked.
There is a set amount of compensation, depending on how big the invoice was. Now, off the top of my head, I can't tell you exactly what those figures are, but invoices up to £999, I think you can charge 40% on that. £40 on that invoice. Then it goes up to £70 on a bigger invoice and £100 on bigger. And we're also looking at whether or not those compensation rates are really realistic now, because I think they were set in something like 1998, and I would like to see those amounts of compensation increased. And it is compensation to repay you for the administration that you've had to put in place in order to chase up those late payments and get them paid.
Yeah. I'm going to put this one to you, Steph. Jackie says we have quite a lot of small companies and they spend a lot of time chasing 20 or so customers for small amounts. How would you suggest improving those so they pay on time? Any tips there?
I mean, first of all, I'd say if you're doing that manually, definitely get a system like QuickBooks Xero. They're relatively cheap. They do all the chasing for you. They'll give you the notifications when someone's paid. They'll give you the notifications when someone's over 30 days, 60 days. So it's removing, I would say, that manual process that we know is so time consuming. So get a system like that, I would say, will definitely take you away from it. And then secondly, I'd be having a meeting with all of them just to explain where you're at, communicate, and whether it's you need to do, they need to either prepay a certain amount every month to cover what they're going to spend, and you agree that between the two of you. We've done that with a few of our smaller customers at the start who are late paying, so they now pay us a set amount every single month at the start of the month, which covers a certain amount of products that they take from us. So I would definitely say get the systems in and then get a meeting with them all separately and try and come up with a solution together that works for you.
I'm going to stick with you, Steph, for Oscar's question, which is about direct debits, where he's got customers that are offering to, I think, pay by direct debit, but can't find a company to service them in an affordable way. Have you heard of that at all? Or
I have. I've got to say, Terry, that's not something that we've actually explored or needed to explore. So I don't know if Joe actually has got any more insight on that one.
Yeah, I think, Terry, from my perspective and Steph, direct debit offers an opportunity to obviously manage cash a little bit easier. One thing that's really important for me is the process and procedures stay the same underneath that, the underpinning of what that looks like. That doesn't just go away. You might have got the cash. I'm on the other end of that predominantly at the moment where we pay via DD. Then we have a huge risk around like our, how we account for that. E.g., we don't have the document to support that. So direct debit's good because it improves your liquidity and your cash flow. To set that up, and get direct debit mandates and put that in place, Terry, I can pick that up offline to go through a process. Not necessarily need a separate company to do that. That can be all managed in-house, depending on the scale, from an ERP system. But I think just to reiterate, it's really important that a process still remains there, because companies will be still chasing for invoices, for the VAT reclaim, and all of that good stuff. Otherwise, you end up running a risk from a down payment perspective on your balance sheet. So yeah, direct debit serves a purpose, same as Steph talked about P cards earlier. They all serve a purpose, but it's about what you're procuring and how you're going to buy that, purchase it, and the right way to do that.
Yeah, and I think for small businesses on the receiving end of direct debits, which is, I think, as well where this question came from, I don't think we can recommend anybody. This is not really our thing here to recommend that. But if anybody else has got any recommendations, you've got a lot of people on the call today. They can share that with, I think it was Oscar that asked that question. A question from Pippa about factoring. Invoice factoring, is it a good thing? Liz, what do you think? Factoring invoices?
So if you're factoring or reverse factoring or looking for invoice financing, you're basically doing some form of selling your invoice in order to get paid now. And then the company that is buying your invoice is going off and collecting the money and keeping the difference. So it does mean that you're giving away a bit of your margin. Can you afford to do it? Can you actually get that the invoice financing company to take you on board? It's a difficult one, but if you're in the position where you have no choice because you need to raise the money from somewhere to pay your bills, then it is an option. Just make sure that you're absolutely clear what you're signing up to. But similarly, some companies offer a discount in order to get paid on time. I don't like that either, because I think that you're giving a discount, your margins are going to be reduced. If you were giving a discount to your customer to get paid early because it suited you to have the money in your bank account and you could use it to invest in something else. So let's say you'd got a good deal on a piece of equipment and you needed the money early. That's a different matter, because then you're thinking to yourself, this is really worth my while and worth my time in order to do that. And we do know that some small businesses have actually asked the bigger businesses to offer what they call supply chain finance, which is financing so that the smaller businesses can get paid quicker. I like to see big businesses paying the costs of that supply chain financing, if at all possible, themselves, rather than putting the costs of that onto the small businesses, because small business margins are really tight. And I know Joe will have something to add to that.
Yeah, Liz, factoring was an interesting question. I see that in the chat. We actually went through a stage where, what you discussed is what we did. We paid in advance, and then the supplier had the opportunity to draw down on funds early, and then would receive a fee for that, and then how that was accounted for, or they would have let it mature as such and be paid at the term. So yeah, I've got experience of that and what that looks like. There is good and bad in that as well, and it does help big companies as well as helping small companies. We used it as the opposite side as well, where we were using it from a liquidity perspective, where the banks would then be supporting us. So yeah, it's an interesting perspective, and seeing that more and more actually in accounts payable organisations, where, like you say, supplier finance, and trying to support that. Just really difficult, I think, certainly in the construction industry where margins are so small anyway. Like you say, it's really important actually you're not driving that behaviour where you're having to have a discount on your invoice to get it paid to terms. That's completely the wrong. That's the wrong behaviour. You want to be making sure that you're getting paid correctly, and you're not asking, oh well, I got paid early, so I'm gonna have to lose a bit of money. That's completely the wrong behaviours and something that we shouldn't promote.
And I agree with you, but also sometimes that supply chain finance is a lifesaver for a small business because it's cheaper than going to the bank and trying to borrow and maybe being turned down. So just be so careful of your options, because you don't want to be squashing your margins so far that ultimately you're on a treadmill where you can't get off it again because you can't build up any reserves.
I'm going to ask this question. I'm going to read the question out because I don't quite understand it, only because I don't work in this sector. And I think I'll start with you, Liz, on this. What else can we do to get late payments via childcare vouchers for our small business looking after children's activities, other than emailing the customers and texting them WhatsApp, trying to WhatsApp them before emailing them?
And outside my remit too, Terry, unfortunately, I have no experience of childcare vouchers.
Throw that question open to anybody that might really know more about that sector in the chat. And I think Jonathan asked about what's our favourite enforcement. Sorry, Edward asked about our favourite. No, it was Jonathan asked about our favourite enforcement action after going through all the debt recovery process and going to court. I think my thought on this, and I think probably most people on here agree, don't go to court. It's expensive, it's time consuming, and 99% of things can be worked out, as I hope you're taking away from this webinar, through relationship building. Liz?
I have to say, come to us before you even think about taking legal action, please.
Yes.
Because we should be able to advise you, even if we can't resolve the dispute for you, even if you don't want us to resolve the dispute for you. And actually, some of my team might even have experience of the child voucher question too. So please contact us in the first instance. We'll do what we possibly can. If we can't help you and you end up having to go through the court process, be careful, because it takes time, it takes money.
So if maybe if Sybil can put the Small Business Commissioner's site into the webinar chat, I'm going to close.
It's there.
It's there. Good. It's there for everybody to see. I'm going to bring this to a close today to make sure everybody gets away on time. I'd like to thank Steph for all of her small business experience, Joe for his big company experience, and Liz for all of her experience as Small Business Commissioner. Thank you, everybody, for joining. We had nearly 90 people or so join. There'll be lots more listening afterwards. Just to remind you, which is linked to this topic today, there's an Access to Capital webinar on the 6th of December, which is in conjunction with the Scale Up Institute. So that'll be very useful to everybody. Thanks very much for joining, and wish you a good afternoon.
Thanks, Terry.
Cheers, Terry.
Bye-bye.